Altria's earnings release is coming up, so I think it's time to look at the stock, see maybe ahead of it, is it a buy? I have British American Tobacco in my portfolio, so I own a rival company to this, but I want to be unbiased about it, let's go in. Revenue, as expected for a cigarette company, kinda flat over time. They were growing until 2021, but since then they have kinda fallen. You hope that at least some revenue growth happens over time, just because they can increase the prices faster than the decrease of consumers. This is kinda a weak point for Altria. The margins, however, as expected for a cigarette company, fantastic, growing and growing and growing. And so are the free cash flow margins. Now there's one difference how Altria makes its money mostly though. Altria is heavily dependent on the smokable products. We can see basically all the revenue. Okay, this is some weird formatting here that this happens. But anyway, basically all of our revenue comes from smokable products. Yes, they have some stuff like oral tobacco, and that segment is profitable, but it is very dependent on the cigarette market. We can see this from their brands. Cigarettes, cigarettes, cigarettes. And recently they bought Enjoy. They spent $2.75 billion on buying this company. They're a vaping company. So they're taking the approach of getting new businesses up which are not in the old cigarette market, which are more future-proof. If this sounds familiar to you that Altria is making a big acquisition, well, you might be thinking to Juul. They paid $12.8 billion for a minority stake in the company. Now that is not chump change for Altria. At the time of acquisition, they made around $8 billion in free cash flow per year. So that is basically 1.5 years of free cash flow just for that minority stake. Well, they wrote it all off. It is gone. And I think this lack of brands explains why Altria has to do so many acquisitions to buy these companies. They're just lagging behind other companies like British American Tobacco. Altria doesn't have any business segments which are very fast growing right now, which are the less harmful categories outside of cigarettes. So they have to spend a lot of money on these acquisitions. Their debt skyrocketed when they bought the Juul stake, and it has basically not come down since. In exchange, Altria has bought back shares. We can see they usually buy between 1 and 2% of shares yearly. If it's better, I'm not here to judge for now. We will only see that in a few years. But currently the company is basically paying out all of its free cash flow in dividends and share buybacks, and whenever they do a huge acquisition occasionally, they will have to finance that via debt. Now they're really highlighting this Enjoy move though. They're saying this will catapult them forward. But Enjoy is not as big of a brand. So well, yes, they have fantastic brands like Marlboro, but they're just not very positioned in the new categories. Now, will I say that Altria will go bankrupt because of it? No, they make a lot of money. They will be able to do these acquisitions, and they will have to do these acquisitions. But what I'm saying is that the debt is gonna be very high, and with their revenue basically not growing at all because they do not have enough new brands to compensate for the revenue lost in the old cigarette market, they are not gonna achieve great growth rates. Yes, they can raise their margin, but revenue growth is always necessary in the long term. Eventually, you will hit the margin limit. And even when you have premium brands like Marlboro, there's only so much you can squeeze out. They have a slight margin expansion, which has kinda stalled since 2018 though. So maybe we're already reaching the ceiling of how much they can raise their margins further, and maybe we should count with a slowdown here. Also, the dividend is not gonna be raised much further. We can see they have been growing it at around 4% over the last few years. Well, it's slowly reaching their free cash flow cap. They still have a buffer of around $1 per share that they're not paying out in dividends, so I don't think there's gonna be a lot of dividend increases. So from my first glance, I would already say I prefer BTI, but let's run the numbers on Altria. They make around 4.8 in free cash flow per year right now. Let's say they're gonna grow at 2% for the next 5 years, and 1.5% afterwards. It's displayed as 2 here, but the value is 1.5. Now, why are these growth rates realistic in my opinion? Well, 1.5% will be in share buybacks. Another 0.5% maybe margin improvement. That's for the next 5 years. Afterwards, it will just be the buybacks. The margin growth has already slowed down a lot, and I think in 5 years they will probably have hit the maximum of what they can squeeze out. So I think 2% and 1.5% sounds reasonable. 10% discount rate, 12 multiple. It's a cigarette company, it's hated. They do not have enough products to become a non-cigarette company, so I think they're gonna stick with a 12 valuation. 85% payout ratio with a little deduction due to taxes. That would bring us to an intrinsic value of $50, which is above the current value, 25% discount. So if you would buy the stock and believe these assumptions would happen, well, I think you would make some good amount of money. However, there are risks. What if they make more acquisitions and those acquisitions also don't work out? 0% growth over the next 10 years. Share buybacks just compensate the loss in revenue from shrinking cigarette business. 10% discount ratio, 8 multiple. Well, $37 a share. You would make around 8% here probably. But I do not like shrinking companies. The longer you hold them, the less money you make. Now what if it goes a bit better? Maybe the Enjoy acquisition works really well. They get more revenue growth, 3% and 2%. 15 multiple because now it's a faster growing company. Well, $60 a share. Overall, I don't think you will make a mistake with buying Altria, but there's a heightened risk than with a normal cigarette company. I hold British American Tobacco because I like the new product segment. While Altria has to do expensive acquisitions to get these products, sometimes they do not work out, as we can see from the Juul fiasco. But overall, I don't think it's a mistake to buy the company. It's not my play, it's not going to be on my watch list. I prefer British American Tobacco. What do you think? Write it down below. Have a good day.